This is the Money Talks podcast with Michael Campbell.
Glad you're with me. COP26 has ended. Private jets have left, along with 14,000 members of the media. The Prime Minister's personal photographer, speechwriter are gone. But with policies that Deutsche Bank senior analyst Eric Heyman says, in quotes, come in the form of higher taxes and fees on energy. Bank of America put a price tag, by the way, on energy transition to net zero at as much as $5 trillion a year for 30 years. Numbers so big as to be incomprehensible. Obviously, there's more discussion to come. But speaking of affordable, I hope you stay with me for the shocking stat, because you know what? Who needs tax increases when inflation's just like taking thousands of dollars out of your wallet? And let me repeat, do not miss the quote of the week from Al Gore, who makes clear the next phase of government oversight and control, this time under the guise of climate change. Plus, I got Mike Leibvoit, Aussie Jerk on the latest government moves on real estate. Victor Dare makes sense of the week's market moves, and a Goofy Award, a final farewell to our elites in Glasgow. But first, arrogance and ignorance. Well, that's a heck of a combination, but both were on full display at COP26 and in the broader climate change debate in Canada. You know, the response I've received from stating, I get it, from nearly 3 years, that there's no plan to obtain or produce the necessary raw materials to transition to renewable energy and electric vehicles makes it pretty clear that asking for specifics is not popular among many people who actually consider themselves climate activists. At the risk of being too blunt, I think that's absurd. If we're serious about the transition, then shouldn't we be demanding specific details as to how to accomplish it? 3 weeks ago, I had a fascinating conversation with one of Canada's top energy analysts, Eric Nuttall, who stated that the energy ignorance so in evidence in the climate crusade is going to lead to serious consequences. We're already seeing the beginning in the form of rising prices for coal or oil, diesel, natural gas in Europe, the UK, and China as a direct result of government policies. You notice yourself, gasoline prices across North America are near record highs. And while there'll be the occasional price relief, a little dip, the upward trend in prices is going to resume, primarily because global energy demand is going to continue to grow right through this decade and into the next. But supply is not going to keep pace because investors and companies aren't putting their capital towards increased production. So presto, higher prices. It's economics 101. More demand means less supply and prices rise. Now, keep in mind, while significantly higher prices for things like gasoline and home heating may cause you some distress, climate emergency advocates celebrate it because higher prices may reduce demand. Unfortunately, though, the majority of the world's population actually can't afford it. Even in Western countries, we're going to have tens of millions of low-income families and individuals who are going to have serious financial trouble with higher costs to heat their homes or drive their cars or take public transit, but on top of the increased prices for virtually every good because transportation costs are increasing thanks to rising fuel costs. But the higher prices won't be a problem for the government officials or the business heavyweights or Hollywood stars, international NGOs, and others among the over 30,000 who went to COP26. These are the creme de la creme of the elites, the likes of Bill Gates, who left his 1.8 million euro a week yacht rental to take a private jet to Glasgow. Or the head of BlackRock, Jamie Dimon, the executives of major corporations from Apple to JP Morgan to Goldman Sachs, who all sit in the board of the World Economic Forum and attended the Build Back Better COP26 in Glasgow. No, they are not going to have a problem, even if energy costs rise double digits. But another question on ending the use of fossil fuels. Haven't heard it. For all the talk of renewable energy and electric vehicles, have you heard Prime Minister Trudeau, President Biden, or climate czar John Kerry, Greta Thunberg, anybody in Extinction Rebellion talk about how we're going to replace the thousands of goods made with petroleum? Things like even hazmat suits recently, cement, lubricants, rubber, some medicines, fertilizers. Literally thousands of products that, as Eric Nuttall points out, represent 40% of all oil consumption. What's a realistic time frame for replacing all of those items? And speaking of fertilizer, I wonder how many people at COP26 or cheerleaders in the media or the educational establishment who cheerlead for policies that now we see guarantee higher oil prices. I wonder if they understand that petroleum is a significant component of fertilizer, and the recent spike in prices is going to hurt food supply. Yeah, I know. I've been talking about that for over, a year and a half as a byproduct of the pandemic restrictions and supply chain problems. But I'll tell you, the rise in oil prices, which are a direct result of government policy, are going to exacerbate the food problem. This week, executives of CF Industries, they're owners of the world's largest nitrogen-based fertilizer facility, declared that already a shortage of nitrogen fertilizer is getting so acute that farmers will be forced to scale back its use. That'll lower corn yields, pushing up the price of food even further. The CEO of Yara International, that's Norway's biggest fertilizer plant, he went further and stated that the energy crunch has made fertilizer too expensive to produce, and went on to say, in quotes, "I'm afraid we're going to have a food crisis." Well, maybe I'm wrong, but I do not see any indication that people pushing an end to the use of oil and other fossil fuels, which has resulted in scaled back investment, which guarantees higher prices as demand increases, have any idea about the impact on things like fertilizer and food availability. I mean, this is literally going to kill people in the developing world. And here's a forecast. I'll elaborate on this at a later date, but higher food prices, or worse, scarcity, along with higher energy prices, are going to be the catalyst for massive social and political unrest. Even the New York Times has started to notice, ran a headline story this week, in quotes, "Europe fears that rising cost of climate action is stirring anger." Well, they're remembering the Yellow Vest movement. Well, wait till they add in soaring food costs. My point is that while I don't doubt the sincerity of the climate emergency crowd, they give me no reason to think they understand the consequences of demanding an end to fossil fuel investment without an alternative ready to meet the world's growing energy appetite. As I said, I'm glad you're with me. I got Mark Leibvoit coming up. He's Timers Digest Timer of the Year so many times, Gold Market Timer of the Year. And I got the rest of the show with Mike, with Ozzy, with Victor, Goofy's shocking stats. Hey, I'm glad you're with me. A story we've been following really since the outset of the pandemic, when, of course, there was so much uncertainty that everybody sort of pulled in their horns. But the financial institutions basically said, we better allow for more loan loss provisions. We don't know what's going to happen. Well, as the pandemic proceeded, we saw the government issuing record amounts of money to individuals and businesses, and those problems didn't develop. We didn't see it in the mortgage market. We didn't see it, at least to the majority of businesses, in terms of bankruptcies because of credit problems. Well, Michael Levy's been chronicling for us the amount that the banks have been bringing back into their balance sheet, putting it into the earnings side of things, because they just didn't need that much money set aside. Well, as we told you about, I don't know, it was a couple of months ago, we said, wait for November, because it looks like the restrictions on dividends are going to be lifted. And that's precisely what's happened. So I want to bring Mike in on that. And Mike, as I said, 6 weeks ago, you told us, look for this in November, when the Office of Security and Financial Institutions is going to, Superintendent of Financial Institutions is going to say, okay, the gloves are off, the limits are off. You can go ahead and distribute and raise dividends again.
And Mike, they're the last to the party, too. Now, the dividends were suspended in March 2020. Pardon me. And while banks had their hands tied, 92 TSX companies have raised dividends. And listen to this, with a median increase of 14%. Well, banks are now expecting to buy back shares and start raising the quarterly dividends faster than usual to catch up to their normal payout ratios. Those payout ratios are generally 40 to 50% of earnings. An estimate at RBC estimates the banks will raise dividends by an average of 18% by the second fiscal quarter of 2022 and buy back just a modest 2% of their shares. But they've got $31.5 billion of extra capital, and that extra capital, honestly, so much of it belongs to shareholders.
Now, look, I want to share with you a thought that I know that was on your radar that I found kind of interesting. You know, there was a conference call this past week or so, and here we have the head of the OSFI sitting and saying, you know what, go ahead and raise your dividends. But then he gave advice to the banks. This is the part that I wanted to get the take on then. He said, do it with humility and prudence.
He wants the banks to act responsibly. Okay, well, if there are two words that are analogous, it's banks and responsibly, because that's the way banks operate in this country and pretty well all other Western nations. But there was a deeper meaning. And Mike, this just really got to me. On a conference call with reporters, the superintendent urged top bankers and board members to proceed, as you said, humility and prudence. What does he mean by that? Reminded them that, quote, not everyone performed as well or had as prosperous an experience through COVID-19 as some of our largest financial institutions, end quote. Well, this wasn't even said exactly to the financial institutions. He used a press conference so he could have the greater Canadian audience on his side, that these big, huge money-making machine banks, they made so much money, but be careful, because don't rub our nose in it, those of us who haven't done as well, because, boy, that's just not right. That's end his quote, end my comment, and I say, what the heck?
Yeah, I found that bizarre also. It's certainly not the job of the Office of the Superintendent of Financial Institutions to be giving advice in that way. But the other thing I always, as you know, I do this, Mike, but I always remind people that keep in mind, if you're a member of the Canada Pension Plan, you own the banks. If you're part of any workplace pension plan, you're going to be owning the Canadian banks. And when they give those dividends, that means it's going into the pension funds, and that's still a challenge with an aging population. So let's just put the context on that. I don't know, Mike, I just thought it was worth talking about, because I, like you, I sort of had one of those, and I'm allowed to say it here in the podcast, but I had one of those WTF moments. Me too. What's just going on here?
Yeah, but the other thing he's pointing at, which he didn't say, but is understood, is he's telling also that be careful with how you raise your executive compensation, because that goes hand in hand with the dividends. But I don't know of any other corporations in Canada, no matter how well or how mediocre they did during COVID, that would get advice of how they should disperse those funds. And it really does bother me, Mike, because they have in fact acted prudently. They kept so much money back in case of bad loans. They've got catch up to play. And as you say, the shareholders are not just the individual investors or corporate investors, but it's every darn pension plan in the country, everybody who's got a mutual fund that they are either investing with now, if it's a general mutual fund, or for retirement. That's all the banks. That's where the investments are. So, okay, be prudent and hold back. I don't need his advice.
Yeah, absolutely. Well, shareholders are there to hold their own companies accountable. We'll let them take that role. Mike, thanks for taking the time. You put a smile on my face. This is one of those moments.
Thanks, Mike.
Time now for the shocking stat of the week. The stat, 6.2%. That's the U.S. annual rate of inflation in October. And when I heard it, I'll tell you, I thought it was a jaw dropper. But many analysts say, hey, that's not the whole story. And they could be right, given U.S. producer prices are up way more, 8.6% compared to last October. And we know food and energy prices are rising a lot more than that, which is why governments remove energy and food, by the way, from core inflation numbers. Unfortunately, none of us can remove them from our daily lives. Hey, in our country, mentioned this a couple of weeks ago, the Canada Dairy Commission already announced that milk prices are going to increase by an average of 8.4% and butter 12.4% starting early next year. And the reason? Increased costs for energy, feed, and fertilizer. I mean, it's a good example, by the way. I mean, you may not buy fertilizer directly, but the cost increase due to higher energy costs is passed on to you in so many areas, like the price you pay for milk and butter. What's interesting, though, is that while surveys consistently tell us that the rising cost of living will top the list of the average person's concerns, the role that inflation plays in increasing our cost of living doesn't seem to register, nor does the role that government policy directly plays in increasing inflation. I mean, for example, if inflation stays at this rate, the average American family at that 6.2%, they make about $1,200 per week. Well, they're going to end up paying $3,917 more for the same goods that they bought last year. Put another way, anyone who didn't receive a 6.2% raise this year, well, they're taking a pay cut. And keep in mind, as the price of goods rise, here's another one for you. So does the sales tax you pay. The government take also increases with those gasoline price increases. And while property taxes rise as the value of your house does due to the impact of loose monetary policy, I mean, it's that, you're looking food, you're looking gasoline taxes, you're looking property taxes. Even better for government is that government borrowing money today from investors, they pay back in dollars whose buying power is reduced. For example, if you lent money to the government, say you bought a 1-year Government of Canada bond, which today pays about 0.7%, but inflation's, let's say, running at 5%. Well, when the government pays you back a year later, the money buys 4.3% less. You're a loser. Good deal for government, bad deal for bondholders. So what's driving inflation? Well, we do have supply chain problems. They don't help. But we also have countries like Switzerland have the same supply chain problems, but little inflation. How about labor shortages? Again, not all countries are feeling the same upward pressures. No, I mean, the reason for inflation is, as Milton Friedman famously stated, is that inflation is everywhere and always a monetary phenomenon. So in the US, what happened? The money supply increased 35% since the beginning of the pandemic. In Canada, we got the numbers of September 2019 to September 2020. That year, well, it increased 28%. You got so much money chasing goods and services, no wonder the price goes up. And I'll move on after one more thought. Who can least afford this? Well, the poor globally and domestically can least afford to pay the higher prices that are a direct result of government policy. And yet, you know what's interesting? I don't hear a peep from people who tell me that they're poverty advocates. No, I didn't hear a word. When I look at the stock market, I want to get great people on with me. Well, Mark Leibvoit has been Timer's Digest Timer of the Year several times, long-term Timer of the Year, Gold Market Timer of the Year. There's a long list. Mark is with vrtrader.com, where he created an array of new and innovative ways of looking at the market and techniques for evaluating the market. So I'm pleased to have him with us now. Mark, first of all, I do appreciate you taking the time, but I want to throw the big question right at you, and that is, when you look at the market, and we do these successive new highs, that kind of stuff, are you seeing anything in your indicators that suggest that the party's nearly over? Have you just, that's what you're going to go on. So have you seen anything to suggest that?
Well, we've seen some things, but the market still keeps fighting back. And whether it's the Fed in there supporting the stocks, or it's, we're in a seasonally positive period now. Michael, we got Thanksgiving here in the U.S. coming up, the Santa Claus rally. I've had a bunch of little trading sell signals, but the darn market just won't break here. So, if we're going to revert back to the mean, there's a huge correction coming, but there's no clear sign that it started yet. Maybe it'll be after the first of the year. I'm just going to have to watch for the indicators,
And that's a key point to make, though, for people. First of all, is the time frame. So individuals have to sort out, are they long-term, short-term, are they trading? And you advise on all of those things, but you do regular trading every day. People get your services. So that's one thing. And the second is you let the market tell you. We can all have opinions. And I learned that the hard way a long, long time ago, that the market doesn't care what my opinion is.
Believe me.
Yeah. So let me just, I also want to bring this up because, we've got the World Outlook Conference coming again in the first week of February, and we've now opened for tickets. But I got to throw something at you and give you some acknowledgement there. People should understand this. When I'm going back 2 full years, and Mark said, hey, you buy this stock called Tesla. It wasn't near as well known. He said, buy it on dips. Then he comes back last year in February, says, look at Tesla, buy it when it dips. And obviously, it's done spectacularly well. It's over doubled from there. Now, that doesn't mean you hold on forever as a trader, as an investor maybe, but as a trader, you don't. But I just want to give you the pat on the back for that, because there's a great example. When I watched that stock, I found it very tough to get into it once it had that second big move. It's one thing to buy it at 90 and watch it go to 800, and then it drops back down, and then it goes to 1,000, and now it's hit as high as 1,200 and, backed off. I just find that difficult. And that's why you need indicators like you follow on VR Trader.
Well, I have to admit, too, that I'm a little tainted by the fact that I had tremendous respect for Elon Musk. The street seemed to always be criticizing him, and I always thought of him as the Edison of our time. And by virtue of all the companies he's created, look at SpaceX, for example, and the Solar City, which he merged into Tesla. So I just thought he was a remarkable guy. So part of my analysis was, yes, the chart looked great. It was a growth company, but I really admired what the man was doing. I have to be honest about that. I don't think the party's over.
I want to come also to something else you told us, and it really was interesting because now I'm going back about 3 years at the World Outlook, and you said, Mike, you got to get a position in blockchain. And you actually started a newsletter, the blockchain newsletter. I mean, that was really early times. And I know in this year's Outlook conference, you're going to talk a lot more about cryptos and, that kind of that whole sphere. And I'm thrilled that you're going to do that because it's such an important part. But as that market has matured, I'm watching more and more acceptance of Bitcoin, for example, of Ethereum also, and a few others. I mean, there's 4,000 cryptocurrencies. And as I say, you do your own newsletter on that. Just give us a quick take on the whole crypto sphere right now.
Well, I think we're still early on in the process, Mike. I think looking back 5 years from now, we're going to wish that we owned a lot more. There's actually, according to my analysis, by the way, about 7,000 cryptos out there. Maybe I'm wrong on that analysis. Governments are supposedly trying to shut it down. It doesn't happen. I think Bitcoin, for example, is bigger than government. China tried to change the playing field there, and then they changed their mind. A lot more coming. I think it's a flight away from, the banking system and currency.
Well, it's interesting. I've said all along that my biggest concern was government intervention, that as long as the cryptos became just a store of wealth, it was an alternative. And we talked ages ago about maybe an alternative to gold, but one of those things that you're worried about paper currencies, so you've moved into the cryptos. Where I got nervous is when it started to be a substitute for currency. And I don't have an answer here, by the way. I'm just putting out my concern. As at that point, I thought, governments can't let somebody else come in. I mean, that's their biggest weapon is currency, monetary policy. So that's what I find fascinating. And I'm with you. I mean, I watched China said, no, you're not going to do it because you're not going to do it here because they have their own digital yuan there that they want to introduce. So I think this is a fascinating story. But the more acceptance, I saw AMC movie theaters were going to accept it. Right. More and more of that, it is getting used as a currency. So that's a negative for me. But the positive, the more you see it used that way, the less likely government's going to be able to do something about it.
Right. I hate to say it's bigger than government, but there might be some truth to that, particularly if companies like you say, AMC, even Tesla, Elon was accepting Bitcoin for a while. So if huge players are involved and the commercial industries are involved, I don't know what government can really do at some point. But listen, we'll just take it a day at a time. I just think it's early. All the young people are in it. The future is there. There's so much commerce being created. It's a store of value for some people. I don't want to be naive about it. And of course, I'm going to follow it like you are, but I think there's a lot more coming.
Well, that's the context of which I wanted to get to, which is, we're still relatively speaking early days. And I loved your point saying, if we close our eyes and we're 5 years later, what will we think of today?
Right. I think you're going to see extremely high, much higher prices. And I see a lot new of, these vehicles. Of course, there's some speculative stuff out there, which is a lot of fun. I don't know if your listeners or viewers are paying attention, but Shiba Inu was a big runner. Shiba Inu was that little dog that Elon Musk took under his wing, and that became the basis of Dogecoin, which he highlighted on his big Saturday Night Live interview last summer. I mean, I just see kids making a lot of money, a lot of the young people. My son, for example, this is a tangential story, bought a couple $1,000s worth of Shiba, made $30,000. And I'm not even in it personally. I'm in the Bitcoin, I'm in the Ethereum. So the kids have taken over this market. It's a young people, it's a young generation play, and we can't fight that. That's the trend.
And I love the point you're making, because I've been thinking about this for a few years. It was one of the reasons that I went so bullish on commodities. And we did, as you know, in 2020 in February, a year and a half ago, we said the coming commodity boom. And it was not because I thought, I really try and emphasize this with people. It doesn't matter what my opinion is. I watch the market, and for the same reason, the impetus toward renewable energy, whatever you think of it, doesn't matter what you think of it, it's coming. Electric vehicles are coming. There's a lot more room to run. And I think Bitcoin, in the way you're discussing it, or the cryptos rather, right, is part of that. And I recognize that at my age, I am not a millennial. I'm not a 20-something. And as you say, that's where so much of the action is, and has been in the markets too.
Right, but there's some ETFs being created now and funds that will diversify some of that risk, and we have to pay attention to them. In Canada, for example, there are a bunch. I have a whole list. I could send it to you. I'm sure you've seen it. Many that are based on the actual futures market, and some that are based on physical delivery of the crypto itself. Bitcoin and Ethereum are the two examples. So there are ways you can diversify, and there are some funds being created. So listen, even when cannabis started, people laughed. They didn't think it was going to go anywhere. The skepticism is actually good, I think. Yeah. We're climbing a wall of worry, as Joe Granville used to say, right?
Well, and you're quite right, because you also do the cannabis letter, but that also came from you and our friend Jim Dines, were the early adopters saying, look, have a look at this space by the people who are going to supply it if you want to be a little more conservative, and that's also worked out well. And you do the cannabis newsletter. Where are we at with cannabis right now?
It looks terrific here. It looks like it finally hit a little bit of a bottom. Now, maybe we finally got all the tax loss selling out of the way because it's been down for months. But there's some good earnings that came out today for a couple of the big U.S.-based cannabis companies. But I'm looking at the chart of all the Canadian stocks, and they look like they made a bottom to me. Now, maybe just a rally into the first of the year. They call it the January effect. Stocks that have been depressed into the fourth quarter, bounce into the new year. It could be a big bottom here. So I'm long all the ETFs for cannabis here. I think there's a play.
Can you give me a couple of the ETFs? And again, people always have to discuss it with their personal advisors and see where it fits and everything, but just something to put on our radar.
Well, in Canada, you got the Horizons Fund. The U.S. symbol's HMLSF. I think you have to look it up. I forgot what the symbol is. That's a NASDAQ symbol. Ticker symbol MJ, which is also another play. So those are just two good. There's a bunch of others. The third one I would give you would be MSOS, which is the U.S. ETFs. And the interesting part about that is the U.S. cannabis stocks have actually made money. They've actually been profitable. So it's interesting that many of the Canadian names like Tilray and Canopy Growth have struggled. Many of the U.S. names like Curaleaf and Greenleaf, that's another one that came out, I believe, with the earnings report today, have done better. So MSOS would be the U.S. play, MJ, and HMLSF, the Canadian plays. And that's the most conservative way to do it.
And I'm not holding you to this, but how is the legalization move in the States? I don't follow it as closely as maybe I could. I own a couple of the ETFs you've mentioned there, but I don't follow that because that'll be the key. But I'm hearing some positive rumblings right now about further legalization in the States.
They've been rumbling for positives for a while and doesn't seem to go anywhere. But like, for example, when I mentioned these U.S. names, they would be making money regardless because they're affected by the state laws where they operate. And they've done well. So the federal change really hasn't affected them, and they've done well. So I don't know if the federal change is going to help as much as people hope it's going to help. I think the stock market discounts this. I think, if you see it in the prices of the stocks, then it means something. So I'm just following the action, the technical action. And what I want to say to you is U.S. names look better. But the Canadian names like HMLSF and MJ are so depressed. There's a rally underway now, and let's see how far it goes and whether the federal legalization plays in. We'll have to see.
I think people can hear how much I love chatting with Mark because his research, of course, he's a long time doing it, his own proprietary measures, et cetera, at VR Trader. It began with VR Trader now. As I say, there's the cannabis newsletter. There's, of course, the other one I wanted to just bring back quickly is the blockchain newsletter. that you do, because I don't think there's much disagreement that blockchain has an incredible future. I mean, there may be debates about, as I say, what government's attitude will be about cryptocurrencies, for example, and we'll see how that plays out. Right. But there isn't that same debate about the use of blockchain and the expansion of blockchain and digital finance, et cetera. And Mark, I just thought I'd tell you this so you don't pass out, but we talked to your office. And just for the Money Talks podcast listeners, we're offering a 50% discount. Actually, I know I'm going to depress you telling you this, 50% discount on the blockchain letter, because I'm keen, and I have been keen, as I say, on getting people familiar with this and the opportunities within that. So I just let people know, just go to mikesmoneytalks.ca. We have the special discount, 50% off on the blockchain letter. So forgive me for that, Mark. Let me just move on.
I'm happy for the business. Thank you.
Let me ask, I mean, and I am flipping around, and let's just say, because your research covers all of these bases. So I don't want to run out of time before I've asked you about what you're thinking of gold. We've had a pretty good move in the last week or so. Anything significant yet, though? I mean, stocks and commodities and currencies trade in a range. Have we done anything that you suspect through your volume measures, et cetera, that this could be it, or do you still need more data?
I'm bullish here. I actually wrote a few weeks ago, there was about a 95% chance we did hit a bottom, and we did. Seasonals are on our side. It was interesting the other day, the US dollar rallied and gold rallied the same day, which I thought was very interesting. One of the rules that I followed for many years is don't tie markets together, evaluate them individually, because you'll get caught thinking there has to be inverse relationships. But that was very bullish, I thought. So I think we're going higher, and we'll just have to see into the new year how far we take it, whether we go to new highs or we just retest. But I'm long all the ETFs for gold here, and I think we're going to trade higher. So let's see how there's a seasonal tendency, I believe, for strength into February. So let's see how it acts into the new year. But I'm long here, and I think we're going a little higher.
Do you have would I be looking now at what the past high was, going back, I can't even remember off the top of my head, like 18
2060, months. I think, wasn't it 2060?
Yeah. So is that a number that I would look at before I'd think, okay, a bigger move's underfoot? Like, people keep talking about the move in gold, because as they've watched Bitcoin, they've watched housing, that kind of stuff.
Well, as long as you and I have been alive, they've been talking about the big move in gold since the 70s. I remember going way back. I guess if you take out 2060, that would be a big plus. I think there's a chance we could take that out into early next year. Yeah, and silver maybe test the $30 level. So let's, again, I'm technical, Mike. I move quickly if things change, but you're asking me for sort of a crystal ball forecast. The numbers are positive here, and I'm giving it the benefit of the doubt.
And the other thing, again, is for people, you listening here as an individual, you say, what's my time frame? Am I a trader on this? Am I an investor on this? That kind of thing. And so, Mark, I'm going to skip around a little bit, because the other one I don't want to run out of time before I ask you what you're looking at when you see oil prices the way they've been behaving. And I'm talking maybe a little broader, not the fact that they go from 85 to 81 or something.
I'm a little crazy, Michael, because I think crude oil is going way the heck higher than people are talking about. And we've already heard people project possibly $100 a barrel. With the stupidity in government, the stupidity of the green movement, they've set the stage for shortages, and the demand is there. And honestly, in the next 2 to 5 years, you want a long-term forecast, I could see $200 to $300 a barrel. This thing can go crazy because of the actions on the part of people who don't understand that we really need it. We need the crude oil to produce the solar energy, to produce the electric vehicles, to do all the things that they want, and they won't have the supply. And if they don't change their attitude by cutting off pipelines and all this other nonsense, it's going to go crazy. So the big high, what was it, $140 a barrel we saw back in 2007? Easily, I think that's going to come out. If I had to give you a 1 or 2 year forecast, easily. That's where I'm at. I'm not saying we can't have a little correction or whatever, but I think the trend is up, and it's being the stage is being set by incorrect attitudes and policy.
Well, just so you know, it's one of our themes here is that you can't replace oil before you've got an alternative grid. And that's exactly what's happened. And, I'm watching companies reinvest, buying back shares, for example, increasing dividends, oil companies, but not increasing production. So
you're afraid.
Yeah.
You're afraid of government. Yeah.
Yeah. So I think that is the scenario, and we'll see how it plays out again for individuals. But I'm proud of the fact we've made people aware of that on Money Talks, when it wasn't really not popular. I could get into a whole thing if you want to hear about unpopular, but it's that kind of thing. And to me, it's just, no, you've got increasing demand, you've got emerging markets, population growth. I'm talking globally now. It's a global market. And so we know demand. You look at the International Energy Agency, which is, recognized as, the experts. They're talking about increased demand into 2030, 35, 38 even, and we haven't replaced the grid, and they don't have a plan to replace the grid either, by the way. So it's just interesting. That's why I wanted to know where you were at with that.
Well, speaking of the grid, all these electric vehicles are going to be built between now and 2040. Where's the electricity going to come from to power all these electric vehicles? Nuclear is a possible source. That's why the uranium stocks have been doing better. I think we're going to have to push back more toward nuclear to supply the needs, because solar's not going to do it,
Well, you've just jumped into my next category, which is uranium, for that very reason. And I've got a Peter Grandich on the back from a year ago, February's Outlook conference. And Peter had one big recommendation, and that was uranium stocks. And he said it's the best easiest longer-term bull market, because he happens to think, and then people have to put their own interpretation, but he happens to think that nuclear is going to be the solution, or a significant part of the solution. And boy, we got very few producers. That's a very small marketplace.
Right. And, from what I understand, it takes 10 or more years to launch a nuclear plant. So when the lights go out and people realize they don't have the power, it's going to take them a decade to create that power. So they better start moving pretty quick. It is
interesting, though, that France and a couple of other countries, off the top of my head, Macron did a big about face. They do have nuclear power, of course, is significant in France, but it was the question of building new. And he came out about 2 weeks ago and said, make no mistake about it, we're building new nuclear power. So that's just an interesting adjunct to that. Okay, now look, time is too short, but I want to come back to the overall market. And just to reiterate, seasonality points higher, and you'll be keeping your eye. And this is one thing I want to be very clear to people. Mark is a technical trader and investor. He's going to look at the indicators. That's what tells him what the market is going to do. So that's why people subscribe to its daily service, literally. And of course, the broader services that are there with Mark at vrtrader.com. So I'm just saying, as a blueprint, we're still looking for higher markets into probably January. You can change your mind if the numbers come at you. More bullish stance when you look at gold on the shorter term, because seasonality pushes it in there. Silver will be taken along for the ride. You'll look at the numbers to see if that's higher. And you're still, as I say, longer term, you want to see how that crypto market plays out, because you're positive on that.
Right. And I would be surprised if Bitcoin gets to 100,000 between now and the first quarter of next year. So I'm looking for higher prices there.
Well, we'll be there, and you'll be with us at the World Outlook Conference to actually talk about crypto and, give us your take on, have an opportunity to be broader on that, or more detailed on that. That's at the World Outlook Conference. That's, first week of February. Mike'sMoneyTalks.ca is where you can get all the information, but get on board with that. I am really looking forward to that, by the way, Mark. And your track record at VR Trader and your team of identifying these markets early on, has been nothing short of spectacular. You'll give me an update on Tesla then too. I'll make you do that, because I'm so fascinated with this stuff.
If it dips enough, I'll be a buyer again. I'm hoping it gets back to about 900 or so share. I don't know if we'll get that low. That would be one heck of a buy point if I can see it down there. On a trading comment, of course.
Fascinating stuff. Go to vrtrader.com. But for the blockchain deal, the blockchain newsletter, go to mikesmoneytalks.ca, 50% off right now. As I say, a range of services. Mark's been Timer Digest Timer of the Year, Gold Market Timer of the Year, Long-Term Timer of the Year. Fascinating stuff. Mark, as usual, you know how much we appreciate you finding time for us.
Thank you for having me. Stay well, and talk to you soon, Michael. Thank you.
Have you noticed that virtually any idea that's outside the government narrative of the day is now called a conspiracy theory? Well, case in point, much like COVID, I think climate change will be the rationale for societal restrictions. That's got to be a conspiracy theory. Well, until you read somebody like University College London professor Mariana Mazzucato, who states in quotes, "We may need climate lockdowns to halt climate change. That might mean governments limiting private vehicle use, banning consumption of red meat, etc. We must do capitalism differently to avoid that." We must do capitalism differently now as a euphemism of do your life differently. And if you're not willing to do it voluntarily, well, we're prepared to use other methods. Which brings me to the quote of the week. As Steve Watson of Summit News reports, this past week in an interview with MSNBC's Andrea Mitchell, Al Gore referred to technology created by so-called Climate Trace Coalition that monitors greenhouse gas emissions, in quotes. "We get data consistently from 300 existing satellites, more than 11,000 ground-based, air-based, sea-based sensors, multiple internet data streams, and using artificial intelligence. All that information is combined, visible light, infrared, and all the other information that is brought in, and we can now accurately determine where the greenhouse gas emissions are coming from. And next year, we'll have it down to the level of every single power plant, refinery, every large ship, every plane, every waste dump, and we'll have the identities of the people who are responsible for each of those greenhouse gas emission streams." Now, here's the part you might want to pay close attention to, in quotes. "If investors or governments or civil society activists want to hold them responsible, they will have the information upon which to base their actions and holding them responsible." End of quote. Does anybody want to bet that's not coming in our future? One of those popular subjects in Canada is rising housing prices, not just in the last 20 months. No, I'm talking if you go back several years, there's always a politician standing up on a soapbox saying, we've got to do something about rising house prices. What's kind of interesting about it is they never quite allude to the role that government plays, which is the most significant factor here. Now we're going to add other things like shortage of building materials because of supply problems. We've seen the inflation numbers and they continue to rise. There's a lot of factors in play, of course. But the government, I want to bring in Ozzie Jurek right now. Sorry. Ozzie, it's just interesting that the government says we've got a problem with rising house prices and affordability, and they never talk about themselves, instead point the finger somewhere else.
Yeah, it's kind of interesting that, look at the last election. Some parties, we need 300,000 units. No, 500,000. We'll do 1 million units. We need it. And then they say, well, what is the problem? Well, the problem really isn't us. The problem is realtors. Oh, no, it's builders. Oh, no, developers. It's foreigners. Everybody else is to blame. But as you point out, the government, who actually represents maybe 25 to 30% of the cost of a new building, they're not to blame.
Yeah, and I mean, we never talk about how expensive it is to have building delays, for example. And again, this is all three levels of government we're talking about, not just one level of government. And we continue to say, and I'm proud we have, Ozzie, and we've said it well before it's even remotely popular, although I don't think it's popular now. All three levels of government have a role to play, though. I mean, they're the ones that introduce, you've got taxation issues there. You've got permit delays, that kind of stuff, that, again, the focus never seems to make it to that direction.
Well, that is the absolute key. All three governments have to get together. I mean, the federal government says we need bidding, blind bidding things because we're bringing in this wonderful new buyer's bill of rights. Oh, the province also now came out last week and brings in a delay of having to put my finger onto the paper kind of a thing. So they call it imposing a cooling off period onto the market. Mm-hmm. And so everybody has these wonderful ideas, but there are a lot of unintended consequences.
Well, let's talk about that because we know that other provinces will be looking at this, just like Ontario did when BC first introduced the foreign buyers tax. So other provinces are going to be watching. So again, BC announced this thing to impose a cooling off period. Can you just give us your take on that?
Well, the president of the Victoria Real Estate Board, he says, we're not sure what problem they're trying to solve with this because our problems are in supply, municipal approval, all of the things we just discussed. And when you take a look at what it is that they want to do is like in pre-construction, if you buy a pre-sale condo, you have 7 days to change your mind. You don't have to do anything. They would like to bring that on any transaction. So Mike, you sell your house to me, I have 7 days to change my mind. So on the face of it, that sounds probably kind of good, but you do not know now whether you sold your house. I go around and make 5 more offers on 5 other houses, all with a 7-day cooling off period. Now I got 6 owners out of the market that haven't got a clue. So I come to my 6th day and Mike says, so are you picking up the subjects? No, sorry. But the agent says, I have another buyer for you. But he needs also 7 days. So in the meantime, where the hell are the owner's rights in this? As an agent, I have a duty to serve you in the best way possible. And this thing makes it very, very difficult.
I'll come back to what you originally said, is that this looks like it's a solution in search of a problem. I mean, this isn't the thing I've been hearing about, and we follow this on a daily basis. I'm sure, Ozzy, you're looking at an hourly basis. This is not the complaint I'm hearing from buyers. Oh, gee, I wish I hadn't got that house. That's just not what I'm hearing. I'm hearing about a lot of other things, but that's not the only thing we're going to, the federal government started to talk about a ban on blind bidding. I don't know where we stand with that because, of course, Parliament hasn't even met yet, but remind us of what that means.
But it's also part of the BC ideas that they have. In this buyer's bill of rights that they had in the platform, blind bidding is front and center. So what it would mean is, right now, if I have my house for sale and there are 5 people want it, they all can write an offer and they're bid blindly, not knowing what the other offers are. The idea is if everybody knew what the other person's offer are, house prices couldn't go up. And if that was the case, then I would have some sort of sympathy for it. But there are several countries in the world that have blind bidding or no blind bidding. Australia, for instance, has an auction system. All the buyers go into the living room of the seller, and then in a free-for-all, they bid right there as an auction-style thing. It couldn't be any more open because the guy says it's this much, I can go that much, and so on. And guess what? Has Australia house prices come down? Is their market down? No, Mike, it's in an all-time record price increase and volume.
Yeah, I would think also in that process, if you're in a strong market, you actually get the prices even higher because someone's worried it's going to be higher a month from now or a year from now. They want to get in. And so the tendency, I would think, is to keep bidding up. Oh, you're going to pay $725,000. I'll pay $730,000. I'll say $750,000. But without that system in place, I've talked to tons of realtors who say de facto it is. Now, it's not blind. It's de facto there's an auction going on. People sort of say, oh, well, it looks like it's going here. That's why you get so many properties in a hot or stronger market going above ask.
Yeah, no question about it. And you add to this, as we talked about last week, there's no product. Vendors sitting back and they don't know. I mean, I've been sitting here for 2 years doing nothing and I made $500,000. So where's it going to go? Maybe is it going to keep on going like that? And what will I buy? There doesn't seem to be anything to buy. So the pressure is even more on. No part of that pressure will be solved through blind bidding.
And you hear throughout the country, different real estate boards representing different locations saying, we've never seen it like this, where there's so little, the listings are so low, so little product on the market.
Yeah, and that's the same in the United States. It's the same in Europe. We have, in my view, a world where we have incredible inflation out there. Yesterday, the U.S. came out with a 0.9% increase month over month. If that were to continue, that would be 11% inflation rate, 6%, over 6% year over year. And they're talking about a transitory thing. We have massive inflation out there. People want to have a hard asset that they can rely on, and real estate is it. In addition to that, though, the U.S. just brought in a deal where the Freddie Mac allows you to have a $625,000 mortgage with 3.5% down payment. So think about it. They're making it even more easy to get into the market, more competition. And so all governments are the same.
And that's where people, I guess our message or my message is we have to focus on that. When you start hearing governments talk about things that have a definite impact on supply, especially permit delays, especially the amount of money in terms of taxes and levies on any new build, which is really substantial, as Ozzy said, sometimes 25, 30% of the cost of a new build, that's when we'll start making some progress. In the meantime, Ozzy, you and I will be there to chronicle it. ozbuzz.ca, ozbuzz.ca. Go to it. Lots of great stats there. Ozzy, thanks for taking the time.
Thanks, Mike. And I just wanted to leave you with this thought that, it is a sign of a good golfer if you're a little bit worse than the other people are. And how do you know that you're a good golfer? Is when you get invited. I get invited all the time because I make people look good.
There you go, Ozzy Jurek. And a reminder, Victor Adair's coming up. I still got a Goofy Award. I'm glad you're with us. Hey, let's go live to the trading desk. I got Victor Adair with me. Vic, as I was alluding to earlier in the shocking stat, I mean, for me, inflation continues to be the big story, but that number at 6.2%, that's what grabbed the market's attention too.
Yeah, the number was printed at 5:30 in the morning here on the West Coast. And within, I'm going to say, just over an hour, the gold price was up $40. And that's following that CPI report. Gold is now up about $100 in the last 7 days. That's 6%. Silver, of course, which is much more volatile than gold, is up $4 in the last 7 days. That's about an 18% jump. That's one of the markets that reacted. Certainly we had the currency markets react, the interest rate market react. But I mean, gold really, which has almost been forgotten in a way, really had its time to shine on the CPI number this week.
Well, it's also part, and I'm going to pat Money Talks on the back here, because I'm going back several weeks. I said, the way I'm watching markets move is you've got to take a position. And I recommended strongly taking, if you like that stuff, take your position. Don't wait for the moves because they're so abrupt, as you've just described. So take a position in silver and gold, because once it starts moving in the way you've just described, then I don't think that's the end move at all. But I'm just saying it's so hard to get in for most investors, not traders, but investors. When you start seeing that kind of thing, you keep saying, as Jim Dines' wonderful charts show us, people always say, well, if it ever gets back down to that, I'll get in, and then they don't. But it's just an illustration of how fast things move once sentiment changes.
Well, I know I've been a bit obsessed with trading the stock market lately and maybe not paying as much attention to some other markets as I otherwise would. But I mean, I looked at gold and I thought, can I buy it when it's up $100? I mean, no, it's kind of hard to buy because it could easily back up $50, and then go again. And if it's down $50 from where I bought it, I'm going to be, fussing. The other market that really got my attention was how the short-term interest rate market reacted. It was like somebody slapped them on the side of the head. I mean, it just jumped. The market had not been expecting this hot of a number. And clearly, as we go out the curve, as we go out into next year, the market is now pricing in at least 2 interest rate increases from the Fed in next year. Whereas the Fed, just at their meeting last week, was taking the posture that they weren't going to be raising interest rates next year. So the sentiment in the market is the Fed has got it wrong. They're behind the curve and that sort of thing. And I think that's percolating throughout the market. Like, if the Fed is wrong, what are the consequences? And how long are they going to stay stubborn if they're wrong is maybe even more important.
Well, I think what's clear is the size of the move has surprised them. If you'd gone back 3 months or 6 months, they've been singing the transitory song for a long time. But it's just the size. So I think, and they don't have a strong record of predicting what inflation is. Maybe it's too difficult to do, but they certainly don't have a strong record. But the other thing I was saying is it starts impacting consumer sentiment too.
Well, the consumers maybe are better at forecasting inflation than the Fed. And that's kind of embarrassing, I guess, if you're on the FOMC. But the University of Michigan came out with their report on Friday, consumer sentiment. And consumer sentiment is about as bad as it's been since we were in the COVID crash, as I call it, in March of last year. Consumers, their number one worry is they're seeing prices going up, in all kinds of things that they buy. And, we could be, let's call it academic almost here when we're talking about markets and all that. But put yourself in the shoes of somebody who's trying to make ends meet, maybe, with 2 or 3 different jobs, that sort of thing. And they go to the meat counter and they go, holy mackerel, look at the price of meat, how much it's gone up. So that's what's got consumers worried. And of course, when the consumers are worried, the politicians down in Washington are, really worried.
Well, and I think the other thing, and I'm going to give you a little different take here. We hear a lot about supply chain difficulties, and they're absolutely true. But where does that come from? Well, a lot of it comes, sure, it started in the pandemic and lockdowns, et cetera, but a lot of it comes back to the inflation story that the U.S. Federal Reserve has increased the money supply 35% since the pandemic began. I mean, we're talking trillions of dollars have been flushed into the system. So, of course, you've got more demand. It's been pent up. They're out there, and the supply can't keep pace. And so that's why it's just a fascinating story. And I want to finish with one last thing for you, Vic, is that the Federal Reserve, why I brought up the money supply, the Federal Reserve is setting a lot of that policy. So they're looking to maybe change who heads the Federal Reserve. And some Democrats want someone who's even looser with money supply.
Well, the current chairman, Powell, his term is up. I believe it is the end of January. It's unusual that he hasn't been reappointed or told he's not going to be there. Although Biden has said that by Thanksgiving he will make up his mind and let us know. But it's not just the chair. There are, I think, 4 positions now going to be open on the in the Federal Reserve as we go into next year. And this may be an opportunity for some of the Democrats, at least looking at it this way, for the Democrats to reshape the composition, the tone, the sensitivity, whatnot, of the Federal Reserve in a way that President Trump reshaped the Supreme Court in a more conservative way than it might have been otherwise. And of course, as we go into the possibility of all kinds of money printing out in the future, maybe the progressive wing of the Democrats would love to see a very compliant Federal Reserve. I mean, it's been one of those kind of weeks, Mike, when I'm shaking my head so much I'm just dizzy.
Yeah. Well, we're going to keep an eye on that story because, again, the big story is how much money's been created, both monetary policy, fiscal policy, pushed into the system. We're seeing it in asset price increases. We're seeing it now in consumer price increases in a lot of areas. I talked about food earlier today. We've talked about oil. So this is a big, big story for people's personal pocketbooks. And we'll be there to chronicle it. And I'll invite people to go to victoradair.ca. victoradair.ca, ADAIR.ca. And Victor, I was chatting, I'm looking forward to the World Outlook Conference because it's setting up again with so many of these major issues to be discussed. So I invite people to join Victor, join myself at the World Outlook Conference. Just go to mikesmoneytalks.ca. Time now for this week's Goofy Award. I'm thinking I should have enlisted the help of a psychologist, actually, because this is actually more than a goofy. I'm referring to when white people pretend to have First Nations heritage. Now, don't confuse that with Rachel Dolezal in the U.S., who famously pretended to be black. No, I'm talking the sort of Senator Elizabeth Warren style. For decades, she claimed of being Cherokee heritage. She identified herself as Native American in the Association of American Law Schools Directory of Law Professors. Not just once, by the way, but every year from 1986 to 1995. And after becoming a professor at the University of Pennsylvania, well, Ms. Warren demanded the university change her faculty listed ethnicity from white to Native American. Only problem was she had no Cherokee heritage. Now, I'm not suggesting for a moment, by the way, this is just an American psychosis. As the National Post's Tristan Hopper notes, in June, Algonquin rights activist Robert Lovelace was called out for long claiming Cherokee heritage himself that couldn't be documented. Then there's the case of best-selling author Joseph Boyden, whose novels feature Indigenous Canadian characters. The author claimed that he had Métis, Mi'kmaq, Ojibwe, Nipmuc heritage. Inconveniently, though, the Aboriginal People's Television Network couldn't find any supporting evidence for the claim. Tristan also notes, by the way, in the National Post, the case of Kingston, Ontario artist Maurice Blanchard, who long claimed to be Ojibwe medicine man, who claimed to be a victim of government programs in the 1950s and 60s. Those were referred to as the 60s scoop, that took thousands of First Nations children away from their homes, placed them in foster homes, and eventually adopted out to white families in Canada and the U.S. Along the way, by the way, that Mr. Blanchard collected numerous government grants. I mean, the only problem was in August, members of his own family stepped forward to say they were just regular white people. Which brings me to this week's Goofy, the sad case of high-profile University of Saskatchewan Indigenous professor Carrie Bourassa, who also, until recently put on unpaid leave, served as scientific director of the Institute of Indigenous Peoples' Health. She first identified as Métis, but went on to claim Anishinaabe and Tlingit heritage. She went into significant detail, by the way, about the difficult childhood she faced as being First Nations, from which, by the way, those kind of claims she benefited professionally, and I have no doubt socially, at least until CBC reporter Jeff Liao exposed the false narrative. I mean, just as an example, reports the take on University of Saskatchewan Associate Professor Winona Wheeler, who states genealogical records show Bourassa is not Indigenous at all, but rather of entirely European descent. The CBC story also quotes Janet Smiley. She's Métis, University of Toronto family medicine professor who wrote a chapter on Indigenous parenting in a 2017 book that was edited by Bourassa. She states she's recently learned the truth about Ms. Bourassa's identity after conducting her own research. In quotes, "It makes you feel a bit sick to have an imposter who is speaking on behalf of Métis and Indigenous people to the country about literally what it means to be Métis. That's very disturbing and upsetting and harmful." You know, that last part should be emphasized. It's not just a bizarre story that I would need a professional to help me understand the deeper motivations. No, it's harmful to Indigenous communities and their representatives. Hey, that's all the time we have this week. But a reminder, the World Outlook Conference, first week of February. Just go to mikesmoneytalks.ca. You can click on, there's an early bird special, but I tell you, what a year it's going to be. I love our track record. You're going back. I was just reviewing Peter Grandich last year, who's telling us that we looked at the uranium market. It was the bullish attitude he's had in 37 years. It's going to be incredible. Well, you look what happened to Cameco as an example, one of his recommendations, up 100%. And the World Outlook Conference small cap portfolio, which we've done every year with Keystone Financial, well, it's up 114% as I talk to you right now. So that's the bottom line. But I want to remind you to get your tickets, go to mikesmoneytalks.ca as you can to get the tickets. But you could also go to Money Talks tweet every day. You can also go to the website, but you can go to Michael Campbell's Money Talks on Facebook. I hope you do all of that. I can keep you up to date. But a reminder, World Outlook Conference coming up. I hope you have a terrific weekend.
Subscribe to the Money Talks with Michael Campbell podcast for free at Apple Podcasts, Google Podcasts, or anywhere you get your on-demand audio. For the complete show, daily podcasts, and more.